bloggers and the media are misleading you. If you heard the news that Michael Burry makes a big short bet against the stock market for $1.6 billion and you're rushing to sell off your stocks and crypto, then stop. We'll give you 5 reasons not to copy the prophet of 2008. Let me remind you, the legendary investor bought puts against the S&P 500 worth $890 million and against the Nasdaq worth $740 million. And now as much as 93% of Michael Burry's portfolio is currently short market indexes. The numbers seem astronomical, especially considering Burry has been trading with only around $180 million over the past 5 years. Are we in for the Big Short Part 2?
You want to bet against the housing market?
If you'll excuse me, Dr. Burry, it seems like a foolish investment.
Yes, it's a foolish investment, but everyone's wrong.
Most channels will give you the hype and shock, but we want to provide you with a more sober assessment of what's going on. There are several reasons why you should not rush to short the market along with Burry. Well, first of all, the Big Short doesn't have a crystal ball that shows the future. Even though besides predicting the collapse of real estate, Burry made other accurate predictions, he was also wrong numerous times. The good thing about Michael is that today he not only gives a prediction but also backs up his words with real actions. And what actions those are? He's shorting the market for an amount much larger than what he earned in the subprime mortgage crisis. The last time the Big Short made such a large bet was in the very same year of 2008.
You must have been pretty confident that this thing was going to blow up.
Well, we had a giant bet for us, and I was extremely confident in the outcome.
Second, even Michael's most accurate predictions didn't come true overnight. In the mid-2000s, he showed his amazing intuition and claimed that the real estate market was about to collapse, but it took much longer than he expected. The expiration date on put he purchased expires approximately in November, so there are still a few months to materialize Burry's prediction. And during this time, the markets before the collapse may well even show a rally. Who knows? Give the video a like and subscribe to the channel before you freak out about the next point. Because the third reason is massive manipulation by the media. Many headlines say that Michael Burry bought $1.6 billion worth of puts. Yeah, we're sinned on that too. However, such statements are misleading because the actual value of the purchased puts is much lower. It is the nominal value that is reported, not the amount Burry paid for the puts. According to preliminary calculations, the real amount that was paid for the purchase of these puts was about $420,000, which is much less than $1.6 billion. The fourth reason is that the information on Burry's bet may no longer be relevant. Quarterly 13FS reports are one of the few ways in which the assets of institutional investors like Burry's hedge fund could be tracked. However, they represent the fund's assets at the end of the most recent quarter and may not reflect current assets. Who knows what may have changed in Scion Asset Management's portfolio in recent weeks? By the way, under the new US laws, US senators and US representatives are now also required to disclose all of their financial transactions within 45 days of their occurrence. And judging by the actions of politicians, they, like Burry, appear to be turning bearish. In the last 3 months, their selling has exceeded their buying by almost 2 times, plus 1 point in favor of Michael's bet. And the biggest reason why you shouldn't blindly believe every Burry's prediction is revealed in this video. Click and get an advantage over the 90% of investors who don't know this. Subscribe and see you in new videos.